Morning everyone, welcome back to the Wall Street Bull. Anthony here. I've got my morning espresso. Let's get into my dividend stock portfolio because it's been a while and I'm due for an update on this. And also I'm going to bring up some points why you need to start investing now if you are young. Let's get into it. Good morning everyone, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Yes, I've got my morning espresso. That's fantastic. Thank you very much to every single one of you who have subscribed to the channel, guys. It's incredible. The community is growing so fast and I love talking with everyone in the comments and the community tab. So if you're new to this channel and you are starting on your investment journey, make sure you smash the subscribe button and turn on that little bell notification as well, because I love documenting on a daily basis right here, either with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom, and my goal at the end of the day is to build generational wealth. So come along on this incredible journey, and if everyone could smash the like button, it would really help the algorithm and the channel, and I would appreciate it. Give it a good old tap down there, the thumbs up, would really appreciate it. Little disclaimer, I am not a financial advisor, so please do your own research and due diligence. It's very important with this stuff. You can jump on your phone, tablet, PC, whatever you use to use the internet, Google everything, use all the social media platforms like I've recommended in every one of these videos, get confident, and also my golden rule is I only invest what I can afford to lose. Yes, we don't like to lose, but hey, I don't like stressing about losing money, all right? So please be careful, set a limit for yourself, and do your own research, all right? Be careful. All right, so now that the formalities are out of the way, guys, I'm going to basically explain why it's so important for people to start investing early on in life, and I'm going to show you the benefits of that and the returns you can make for yourself over a long period of time investing in the stock market, which is what I'm doing with dividend stocks and a couple of other index funds. And I'm going to show you the importance of why I've started now, and I wish I had learned this many years ago. So if you are young, you're in an incredible position now to make a lot of money for yourself in the future and make money work for you and not work for money. All right, so I'm going to show you this now. This is a compound interest calculator. So this is going to explain and show you the power of compounding interest over time. Also, for those of you who are asking about what dollar cost averaging is, this is basically going to explain this for you as well. So, for example, if you buy an S&P 500 index fund, basically in the US, you can buy a fund which is like a basket of stocks, which is a huge amount of stocks, all the top 500 companies in the USA. It will basically diversify your investment for you, so you don't have to worry about buying individual stocks, and you can also earn passive income through dividends. So that's getting paid every quarter or monthly, depending on what kind of index fund you are or ETF that you are buying. So, going to show you this now. Your initial deposit. So, for example, you have $1,000. And this is dollar cost averaging, by the way. This is what it is. So your regular deposit, you're going to put $100 every single week for a period of 30 years, right? So your compounding is going to be annually. So every year it's going to compound and grow. And the average rate of return for an index fund or an ETF is on average about 8%, right? Which is fantastic, because in a bank, in a savings account, when you've got money and you leave it in the bank, you're getting virtually nothing for that money by holding it in the bank, and it is decreasing in value, believe it or not, because of inflation going up and the cost of living going up. The money in your bank account actually goes down in value, believe it or not, which is really annoying as well. So here we go. $1,000 initial deposit, $100 a week, dollar cost averaging. So you're putting in $100 every week into an index fund, diversifying your money. It compounds annually. 30 years you're going to be in the market, and you're getting an average rate of return of 8%, which is incredible. Let's go to the results. So your initial deposit of $1,000, you're going to be depositing $156,000 over a 30-year period. This is your money that you're putting in over 30 years. Total interest you're going to be paid on that money is $442,135. And basically, at the end of this 30-year period, you're going to have $599,135 in your portfolio because you've invested over this period of time. Look at how incredible this is, right? Now, for example, let's say you want to put in $10,000. This is your initial investment. And say you want to put in, if you can, $200 a week, every week for 30 years. Let's go down to the results. Look at this return. So your regular deposits over 30 years, you're going to deposit $312,000. Your total interest that you're going to make on your money that you put into this is going to be $956,000. Total savings at the end of this 30-year period is going to be $1.2 million. Had you put this in a bank, forget it. You would get nowhere near close to this. You'd probably be lucky to get $500,000 if you're lucky, basically on the interest paid in your bank account. This is the importance why you need to be in the market a lot longer. When you're young, you should start investing into a stock market index fund. right now, because the time you're in the market is going to be where you're going to make your money. So it's incredible stuff. Interesting statistics as well. This is from the ASX. This is the basic, the Australian stock market. Obviously, I'm investing in Stake, which is a US stocks. For those of you who want to know, so 36% of people in Australia own listed investments. So stock market, 6.48 million people. The population of Australia is 20 million people. So it's incredible to think that hardly anybody is actually investing in the stock market to grow their money. Keep going down here, 36%. So indirectly owned, 5.94 million total direct investors. So 5.94 million people are actually investing. Indirect, both indirect and direct only. So it's some interesting statistics here, which is incredible. So ages 18 plus, for those of you who want to know, I just find that incredible that only 36% of the Australian population are investing their money. It's not enough for my personal opinion. It should be a lot more than that. Regardless, this is the importance of why people need to start investing. This is the index fund, VU, by the way. This is what I invest in as well as many other companies as well. So VU is the S&P 500 index fund. If you buy this, you're buying a lot of companies, 500 companies, diversifying your money. And look at the returns over there since 2011, $116. This is incredible, guys. Look at the money going up in value. So not only are you getting the benefit of your investment going up in value, you're also receiving dividends as well every single quarter with VU, which is incredible. So you get paid every single quarter to hold shares in VU. Incredible. All right, so I'm going to show you my Stake portfolio. For those of you who want to start investing in the US stock market, this is what I use. There's a referral link below. If you use that, we can get a stock in Dropbox, GoPro, or Nike. And yes, I've got many stocks in GoPro. I did get one in Nike, which is incredible. It took me a few years. And also I've got some in Dropbox as well. So my portfolio is currently sitting at today $28,241.29 USD. This is US dollars. And I've had a day return of negative 0.26%. So I'm not worried about this because I'm a dividend investor. I buy shares and stocks which obviously pay me passive income every month and quarter. And I'm not worried about when the market goes down because I'm still getting paid those dividends. So in total, because I bought all throughout 2020, when the market actually crashed, I took advantage of this. I dollar cost averaged in for an entire year, and I've had a total return of 25% on my money. That is incredible. You would never get that in a bank so long as you tried. It just doesn't happen. This is why it's important to invest in the stock market and to keep your money there and to dollar cost average into it every single week. So $5,725.93 is what I've made on my investment. So this is in 12 months. This is awesome stuff. Basically, what I invest in is dividend paying stocks. These are the main ones I basically purchase here. And obviously, if you're wishing to start out investing and you don't want to buy individual stocks, you buy an index fund. For example, like I mentioned before, VU is a great investment that you can diversify your investments. You're buying 500 companies, and the return has been incredible, 55.85% in the last 3 years. That is ridiculous. You would never get that in a bank. So 55% return. The stock is $414. You can buy fractions of this particular index fund if you can't afford to buy $400, which would equate to nearly $600 in Aussie dollars, which is quite expensive, but something to consider if you're wanting to diversify your investments. Now, this particular stock pays you a dividend yield. Here we go, 1.27%. So the dividend yield is not that high. My personal preference is to go for dividend yields between 2 and 5%. Some of my holdings are over that 5%, which can start to become risky. And the reason why that is because a company can actually cut their dividend because they'd rather use that money, rather than paying shareholders a dividend or cash payment every single quarter or month, they'd rather reinvest that money back into the company. So that can happen as well. It did happen with Disney, believe it or not. Disney company cut their dividends and they started reinvesting that money back into the company. So for example, the other one of my favorite holdings at the moment is EPD. This is Enterprise Products Partners. This is an oil and gas company, the energy sector. Their share price is $22.32. In the last 3 years, let's have a look at that. It's been pretty much all over the place, but it does pay a fantastic dividend, and they have increased their dividend every single quarter, which is awesome. They pay a dividend of 7.96%. Yes, it's on the higher scale, but they have increased that dividend and they are paying this consistently, which is good. So when you're starting out in dividend stock investing in particular, you want to invest into companies that are basically consistent with their dividends and basically have been consistent for a number of years. 10 to 20 years is fantastic as well. And if there's some companies that like Coca-Cola that have been paying dividends for many, many, many years, guys. So a long time. So basically, that's where I'm at the moment. And in regards to what I've purchased in the last week, I'm going to show you this. I bought more of AT&T. Yes, they basically are, have changed their business model. I believe in the next year or so, they are probably looking at cutting their dividend. However, AT&T is a cash-making machine. Their telecommunications side of the business is just generating a lot of cash flow, which is good. They have partnered with Discovery as well and HBO, so they own that. And obviously, I'm investing in this long-term, not short-term, guys. And I believe that this is still going to consistently pay dividends. So AT&T is definitely one for me. SPHD is one that I love because SPHD pays me a monthly dividend. I receive cash payments at the end of the month, every single month. And this has been an incredible way for me to increase my portfolio in size and reinvest those dividends as well. And EPD, again, definitely one that I love because it pays an extremely high dividend. Yes, it can be a little bit risky, but they have consistently paid those dividends and have increased them as well, so which is all awesome. I've done in the last week, guys. So I just wanted to give you an update on that. Let's get into my dividend tracker now. So you can see here on my dividend tracker, and for those of you who want to use this app, I'm not affiliated with them at all. It is available in the iOS App Store. Please feel free to use it. It's called Div Tracker. You can Google it or look it up in the App Store. So my annual dividends a year are sitting at $1,348.12. This has gone up substantially, obviously because of those 3 investments I made this week. My monthly dividend basic income is $112 a month. I'm earning $3.69 a day, and my average yield is 4.41% across my entire portfolio, which is a good dividend yield. It's not too high and it's not too low, which is good. So today I'm actually due to receive a dividend from UPS, the courier company, of 19 cents. And my top dividend payers, I'm going to open this up. Here we go. ExxonMobil pays me $422 a year. SPHD pays me $173. EPD now $115. Prospect Capital pays me $101. O Realty, a REIT. For those of you who don't know what a REIT is, it's a real estate investment trust. This is a great way to get involved in real estate at a young age. If you can't afford to buy property, you can buy a REIT, and you're basically investing into real estate with commercial properties like shopping centers, retail premises like cafes, retail stores, that kind of stuff. This is a great way to start investing in real estate if you can't afford to buy a property yourself. This pays me $97 a year, and they pay monthly as well. AT&T obviously pays me $84 a year. VYM is an index fund that's a high dividend yield ETF. Again, a great way to diversify your portfolio, which is you need to do, obviously, because you can't just rely on solely one stock. You need to diversify so you ensure that you are going to be making money over the long term. That pays me $75.12 a year. And Stag is an industrial REIT, like warehousing in factories, real estate. This is a great one as well, and this pays monthly as well. They pay me $51 a year to hold this stock, which is incredible, guys. So that's basically my top dividend payers. The annual dividend goal that I've got here, I've got a 7% goal. 7% of my goal of $20,000 a year has been reached. This is proving very hard, but I will hit that goal hopefully in the next 12 to 13 months. I'm hoping, fingers crossed. I'm going to focus on this. 31% of my dividends are from energy and minerals companies, and dividends receivable this month is $141 in dividends that I'm going to be receiving this month, which is awesome. My portfolio, just wait for it to load. I've had obviously consistent investments here with this portfolio, and it's proven to be incredible returns. This is in Australian dollars now because I've set it to AUD. $38,212 is the value of my investment portfolio. 25% return. I've made $7,682 of my money in 12 months, which is unbelievable. These are all my companies here that I've invested in. Let's scroll down to my favorite part of this. 10 years. If I don't do any more investing, meaning putting in any more of my money, the portfolio is going to be worth $63,000 with reinvested dividends. Again, reinvesting consistently. The companies pay me a dividend. I reinvest those dividends. It's going to be paying me $4,300 a year, which is incredible. We go straight to the 20-year chart. The portfolio is going to be worth $195,000, and it will pay me $22,000 a year in dividend income. Think about that. Not only am I getting the benefit of the compounding like we explained earlier, I'm getting the benefit of the stock price going up, compounding interest, also the dividends going up in price and obviously in value because they increase their dividends over a long period of time. So they also get more money for those dividends, compounding interest. It's just incredible to watch the money grow. This is why I love dividend investing and investing in the stock market in general, because I love watching my money work for me and me not working for money. Awesome stuff. So here we go. September is my big paying month here. $141 I am going to receive, and $40 is yet to be confirmed. October, $39 plus 24 there. So it's still got a few dividends to be confirmed by the company. November is $105. December is another big month for me, $190 in dividends. January, $59. February, $104. March, $181. April next year, $60. May, $101. June, $179. July, $60. So my goal at the end of the day is to get this up to a minimum of $100 a month in dividends. This is what I want. I want a minimum of $100 a month in dividends to reinvest. Once I hit that goal, now we're going to set a new goal. I want $300 to $400 a month in dividends coming in. Now that will seriously speed up the compounding and the snowballing of my portfolio growing a lot faster. So that's pretty much it, guys. I just wanted to give you an update on my dividend stock portfolio. I think it was due. And yes, I know it's not a crypto video, but that's just one part of my investments. I needed to show you, obviously, my other section here, which is the dividends and stock market investing, and why it's important that I do this as well. All right, let me know in the comments below. Are you a dividend stock investor? Please feel free to use the referral link below, and we'll talk about it, all right? Crypto video coming up next. Stay safe. Peace. Bye.